Best people, how are you? Yep. So there's going to be stuff going down today. I've positioned for this, and I will be right or wrong, as is always the case. And you should take responsibility for whatever happens. If you put on the trade and you make money, it's you that did it. I'm going to just give you my take. If you put it on and you lose money, it's going to be you that did it. So you see how it works there. It's going to be you, whatever you do. But this is my positioning. So that was P off the roof material, crypto total market cap, excluding BTC and Air. So this is a total three. It's an interesting place to start, actually. I will P off the roof here, bounce, P off the roof, capitulation, low snapback, moderate pullback, fairly buoyant bounce, longer, more sustained pullback, eventual low actually there, even though it looked like it was there, marginally lower low. So that just becomes a marginally higher, lower high to that. You get that, what I just said? Let me say it again without stumbling and confusing. High, absolute low. That is just a relative high in lower lows and lower highs cycle. That's Dow theory. Then the squeeze started. That is your up, but only very slightly, and that is your down. So that is in essence how you're at set up on the total three. That's where we are, total three, excluding ETH. And I could have done total two. I don't think they're very different. We'll have a look at Bitcoin as a standalone in a minute. So that's the jaw. Typically, directionally, how do we resolve for direction? Because this is a question of direction. And I will also say it's a fundamental event. What are people waiting to hear? Forex Factory. And I did share this, but I want you all to bear it in mind. You are trading a CPI number. Now, I know where I stand on that because it's my house view in my mind on everything that I see that they want inflation and they're going to keep pushing out a hard number so that they can keep validating, churning the pain. They need to create a crash. They need to keep tightening to create that crash. So I've got you on a different screen. I don't know how that changed screen. I've got to book a rental. Let's go back, please. Go back here. Come on. There you go. It's coming back. Car rental booking on another screen. You don't need to see them. They're useless. They're not going to be open at 11:30 when my plane arrives. Typical British. Anyway, back to here. So the key number. So 8:30 in US time. By the way, that's 7, assuming you're 7 a.m. now. If I log in, which, whoops, I will do, and I want calendar, it'll adjust to my computer time, and it'll tell you that 3:30 is CAD employment change, 3:30 is CPI, expected 0.7, previous 0.3. That was a big shock. That was damaging to Bitcoin. 2 p.m. here. So for, whoops, this is the entire week. Let's just get it to the day, shall we, boys? Let's try one more time. Day. He gets it right in the end. So today is actually very brief. It's all about Canada and the US, and it's all about this coming out at 3:30. And my time now, 2:30. 2 minutes past 2 down here. So it's in an hour and 25 minutes essentially. This CPI. So where does CPI go? Do you believe that their current interest rates and the hike in bonds, don't forget there's been an effective rise in interest rates just on bonds and housing, fixed mortgages, etc. So this was are we on CPI monthly? Yeah, this was your 1.2. When was that? April. Yeah, let's get a bit more of the recent shit, shall we? So that was 0.7, 0.3 the previous month after a 1.1. Forecast is somewhere here. I think we meet or exceed. Why? Because of oil, generally. Because of a lot of commodity prices not really that low. I mean, lumber came down because it's tied to housing really, really hard. And I'm going to give you macro market reasons why. So now we're going to leave crypto and come back to it. Because yes, you want to see total 2. Yes, you want to see Bitcoin. Okay. But I need to show you other things. So here's how the thinking goes. Other things. We did, funnily enough, on this point, just before I leave crypto entirely, highlight that BTC got a bit of a move up and started a small period of overperformance here against this. But I don't think necessarily that works out. And I have highlighted before, it could be the same as a previous event or nothing like the previous event. And by that, I was referring to this. This was the, now remember this on against the dollar was, instead of having a rising like this was the upside HVF I got wrong that saw an up move. So on BTC, that was flat. It was like that. It had these very jerky, and then it did that and fizzled. Do you remember? This is the same thing against the IX. This is NASDAQ. It got a slight over performance, but then that was because the Fed did a 0.25 interest rate hike. It was like, yeah, this is our response to being at 8%. Now, this does have a small element of similarity. There's your big impulse. There's your skittish 2 impulses, and there's your kind of third. And in the interest of, I should actually bring that Bitcoin up because it's a bit difficult for you. I visualize and I can see a chart entirely. I'm sure you can too. There's nothing special about my lazy old self. I'm sure you can too, but it's more difficult maybe for some. This is more of a fractal, this bit, and the other bit is not in. And in the Bitcoin case, it was very similar as well. There was a bigger impulse, and actually this was the fractal. This was kind of disproportionate. I've drawn it a bit proportionately there, but it was kind of bigger and lumpier. And you kind of got the same thing here. Now this one resolved up because of the 0.25 on an 8.1% or 8.4%. So that was divided by 12, a 0.7 number and 1, I can't remember what it was that came out. They just said, okay, well, we'll do a quarter point raise. You know, that was just pissy. If they have a meet inflation or beat on inflation, in my opinion, I can only give you my opinion. I don't know what these cranks are going to do, these deceivers. I just know deception is their game. In my opinion, if we get a reduction in inflation, Bitcoin goes up. If we get meet or beat, Bitcoin goes down. Now, they do cheat as well. They have used car prices and all sorts of things in there, and that could reduce inflation immensely. They have a disproportionate weighting in it, and that was a part of it. So they could do this, and you could get a second time the rally to the upside in the same way you got the second time there. Remember, this is still against the NASDAQ, not the full BTC dollar. We will go there in a minute. But this is marginally lower low. You could find you get more overperformance to the downside on tech stocks now than Bitcoin. Slowly but surely, but that they both go down, or they both go up and you get an overperformance on Bitcoin to the upside, and then the alts even more so, which will be damaging for me because I'm short and it will take back. But assuming oil and assuming a lot of things, I think they might need to give a couple of things a rest. So here's a couple of assumptions as to why I think so. I suppose having done that BTC, all that nonsense on IX, I should just remind you of this properly. That's what I was trying to get you to visualize. These were kind of more of a fractal together. This was a little bit disproportionate. It's kind of big. It's not unacceptably so because you've got a very high move, but it was more about the time frame. This had a very long time frame, and the second one had about a third of the time frame. So these were more, proportionate. In the same way that that's more of a thing, then that is part of it. Because they've been spiky and volatility. Normally, when the volatility comes in, it's nerves. That's usually bearish. Remember, we've stayed stuck on the 30K. The next down leg is your 25. It's key level to key level. And you'll spill through it if you do. Last time, incorrectly, we said down, and the Fed did a 0.25% rate hike on an 8% inflation. If the inflation number comes in below 0.7, 0.6 or lower, possibly, don't know quite how it will behave if it meets but doesn't beat. Not entirely sure on a meet that doesn't beat. I think it will still work as inflationary because it'll mean everything they've done has had no effect. So you could go up and then you'll be an extension of this flag, and then that'll roll to the next meeting. Don't forget, in this environment, you're a bit closer to when they start to take liquidity out of the market. Not a welcome thing for Bitcoin that needs new money to come in from institutions. So those are the thoughts. What does this mean? Let's just look at how the dollar's doing generally. So Bitcoin down, dollar up. Let's just be clear as well on that. Inflation high, debt markets also. So we need to pivot to some traditional markets because we'll come back to crypto. Crypto is the paper boat in the bay. And that's a question, is it going to be a stormy bay or a calmer than expected bay? So we go back right the way down and we sit here and we have a look. Dixie. So this has got a large euro component, up and moving up strongly. I'm looking for an RH2 here. What do you think I am thinking? Bitcoin stronger. Bitcoin stronger. Out of this. No, it's not a ascending meg. This is a broadening structure trumpet to the upside. It's already extended, being the possibility of a megaphone. When it was there, it was a possible one, and it broke to the upside. So you see that, just to be crystal clear. So I'm seeing a run to 104, through 104. You had that iceberg above the 104s. That was the melting wedge. I'm seeing you revisiting that. That's euro weakness. See that? Was 107, now 105s. Dollar strength going into the market. So I see a further run into here. You've got an hour and a half. There's going to be some fireworks. You've got to go from 103 into somewhere here. I see. That's what I see. And I think they often have the news before the news, these FX traders. Euro thriller. We were modeling for the bear, and I said, I don't think it, but we got to do it. I hate to draw it. Remember, I was saying I hate to draw it. I just can't trust the euro. And they are 39. I tweeted this out. Euro PPI is at 37.2% year on year. That's producer price inflation. So if they put up their prices to the same degree that their input prices are going up, everything they sell should go up nearly 40%. And what did they do? And she said, we'll raise rates in a month's time, not now, in a month's time by 0.25. That is comedy. It is freaking comedy. 40%, guys. 37% producer price. Tell me those guys aren't going to, apart from they raise prices 30%, they're taking a 7% hit on margins. Good luck. People are going to buy a whole bunch less if you start to get price increases of 10, 15, 20, and 30%. So that is the key point. This tells me, and I said this, they are transferring by pushing the dollar up relative to the euro. They are transferring. They've stopped exporting dollars. They are exporting inflation to the other nations by the dollar going up and their currencies going down relatively. The seesaw of the euro US dollar, bang, 40%. You see it. You heard it here. We called it for you, and we said to our European friends it's going to get ugly, especially with their reliance on gas and everything that's gone on. They've been locked contracts on gas and heating. And by the way, people cook with gas. It's not only if it's getting warmer that gas prices are coming down. No, they cook with gas in the UK, in the Europe. Everybody has gas ovens and stoves. Natural gas. So much for your it's no longer winter sell-off. This is close to near highs. Technically, I'm not mad for this volatility. It'll probably have a shakeout of some form at some point. But this is what's been baked into the euro price. But you can still do a falling wedge here. Marginally lower lows. And then you can boom, chuck-a-luck, and you'll be looking for an RH2 at 9.4 again. A scenario, not a prediction. But gas is ugly. Oil. Love of Jesus, he says. 1, 3 spinning tops. This is a 3 rising method. That right there, good people, is 3 rising method. The only way you stop that monster from blasting this high, because it has walked and walked and walked its way up and continues. We are big oil bulls, as we told you. Countless times we have said people are going to underestimate how far oil has gone. We've said 250,000, call me when you've landed. This thing is bumping up. How do you stop this from absolutely melting up here and taking out the highs? I'm not sure you can long run, but how do you turn it at least into an RH2 with some form of a down leg? Dollar pump. How do you pump the dollar? Inflation number high. Inflation number high means tighter interest rates, guaranteed next month 0.5, the one after, and the one after. Bonds, fucked. Yields spike, values down. Oil slows. Minor reversal, falling wedge, drift off. You get the story. If we don't get a high CPI number, and we have oil up top here at 122.41. In other words, the likelihood for rate hikes are being diminished. Thank you. If we get that likelihood diminished in rate hikes, that is going to be more stimulatory. This oil moves. Either way, it's bullish for oil. It's just first a pullback and then moon, or it's continue mooning. I think they need something to slow down the concept of oil going up this much. So how do you do it? Dollar. It's dollar priced. Look at Brent. It's at 125. 124.9. That's a whisker away from 125. Max spike high 137. USD WTI spike high 129. Man, guys, we got to remain long oil, but you've got to not put anything on now until that number is on. And if it comes back slightly, you want to be a buyer. So oil needs a strong dollar, otherwise it's going parabolic. If they aren't tightening rates and killing demand, that oil is going to be unsustainable. It's going up anyway. We're an energy bull. I'm a bit frustrated. I decided to buy a uranium spot instead of something more directly oil orientated for my energy play. But uranium has done okay, pretty damn well. But oil, 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 oil. Oil, oil, oil. You'll be oil, right? Anyway, so then you look at these guys. What do these guys need? Remember, it was, it's looking quite groovy. No, breaks the grind line to the downside. I shared these to you. Breaks the grind line to the downside. More downside needed. What do you need here for forcing the S&P down? Upward pressure on interest rates, dollar strength, high CPI number. Again, the CPI number to push these equities down to run these targets needs to be matched or above. High CPI number kills these guys. ARC, rising wedge, needs to be killed to the downside. High CPI number. CPI comes in high, it kills tech. Doesn't like interest rates, tech. Going up. This is the key moment and key point. This, head and shoulders. Look at this beautiful thing. The US 100 index. Man, oh man, what a chunky beast. That is a sell. Oh my God, it's a sell, it's a sell, it's a sell. And this is actually still quite early. You know, you could get on this one. I have no idea which equities are included here. So to me, as a result, I am short maker. I am short on the crypto side. I am short debt. Look at this. Look this view. 94550. That's a whacker of a seller. ARC, where's our lovely, 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 lovely techie things? That is looking for a downside. High CPI number. So everything is set. I mean, it can turn and pump. I can't talk to you with conviction. You must be wary of a man with conviction. It's someone who's given up seeing how he's wrong. How do we be wrong? Low CPI number. They're winning. Second-hand cars have gone down. I don't believe for a minute you're curing this inflation, guys. It's meant to be a hyper-stagflationary event. But they might have a temporary delay, and second-hand cars aren't being bought for the silly money they were buying, and they got a disproportionate weighting. Maybe they bullshit, get a number that's below the expectation, etc., etc. You might get a minor bump back into the wedge, and you make a. This is an example of how ARC could maybe you get a bump back in, and you get a separate third like this. And this is treated as a complex one. That gets treated as a toothy grin, complex 2. And instead of spilling now, you spill later. But it's going to spill on balance of probabilities for me. The question is it spilling here or is it reforming? That's an example of how I could be wrong on ARC. I would expect it to spill on today's number in actual fact, but maybe it spills later. And this is complexity. If I'd drawn that, I would maybe have drawn this more like this and describe it like that as a spill. I haven't wick trimmed so much there, so I'm not being consistent. So I don't like overworking something, but that would point to it spilling now. But that's how it could extend as I gave you. And that would mean us being wrong today, but right long term. I think we have the right fundamental biases. They want inflation. They want inflation because they want justifications and validations for turning the screws on you. So if we have a look at Euro USD, it's a spiller. It needs to come back down. Have a look at Euro Swiss franc. Also potential for coming back down. This has been a cranky old period. We had a beautiful chart on Euro Swiss franc. Let's put the eye on. Where's that jaw gone? Why has it changed? Maybe it's the wrong one. Let's take that one. That's the one. Look at that. Compliance. Spike through. Sell the euro. Back down. Hammering on the neckline. Hammering, hammering. Where will he go? Well, the Swiss franc's not been directly strong. In some instances, it's been one of the weakest. But this overall is a flag. And there should be a splitter through there. So we'll split him. This can be adjusted slightly. I'm going to go up a time frame. That's an 8 hour. Let's go daily. And just this is slightly out of sorts there. That's it. 12 hourly, probably better. We have a 12 hourly. And here, and this one a little higher there. So that like that, and this like that. So there's a kind of a flag rally. Whoops, that still nips some candle wicks there. Maybe it's a bit flatter, like that. And that's got to flatten a bit too, like that. So it's a fat old channel, but I don't think it's going to survive long at these levels. So on the shorter time frame, it's found a bit of a floor at some round numbers. So taking it back down. A little bit of a bounce, rally, rising wedge, but then later to sell. It's on a splitter. You see it's perfectly on the splitter there. A couple of things are that basing out, that topping out over there. That's the value of drawing them on the bigger time frames. So USD, DKK, boom, shakalak. Reassert, blast off. Hello. It's there for you guys. You want to take her. It's there. And this can go properly up for an RH2. Then it might rest for a bit again. So USD JPI, this is an interesting one. What's happening here? Drop it to 30 minutes. Drop it to 15 minutes. The yen has been killed, and now a lot of currencies are pulling back against the yen, especially like the euro, for example. See? USD JPY, kind of rounded, very strong second impulse, but I would bet on upside. I would say you're in the process of making a third. In terms of the dollar, So this is a buy for me on the lower range. You got to say it like that when you're talking about the JPY, because you're being squeezed. You've got to be stupid like me. There you go. That's an accumulate longs for me. Stops there. You've probably got some possible structure. I don't want to be too, because that would obviously require a triggering, but that will be some point that might dovetail with a first interim run when you subsequently get a funnel here. That inverted head and shoulders, and then you go again. Just a bit of sketching and talking you through it. So everything I'm seeing here, look, it's nothing saying, how do I be wrong again? You could dip a little lower and still be in a valid HVF. Or you could just invalidate the HVF and run that low and that low. And then I'm wrong. You saw the Euro USD invalidate, never felt that one. What's the rationale? What was the wisdom I had apart from a distrust of the Euro? Korean won starting to inch back up. Been in a resting dull zone for a while. Look at the momentum there. Look at it. This is RH2 material. Hey, maybe it's melt up fire material. You've got to have your ones on. Get your ones on. Kospi, back down hard. This was always rally. This was always rally structure. I never lost confidence in this. Going down. Look, it's a gap down. It doesn't run the low yet. But that was at and around your high on your USD Korean won. There. You are motoring again. You are motoring again. Our house views are pretty much on the money for how this whole story goes down. I don't think anyone else is reading this market the way we do. Brent's right about the dollar strength, but he should be talking about ruble strength, by the way. Ruble is the new solid currency because it's backed. Simple as that. Harvard. Oh, I don't understand how it's doing so well. Professors. Well, I fucking do. He's got the gold, and he said 5,000 rubles is a gold ounce. Well, that's easy then to work out. Let's see if we can do it. What's gold? Am I going in the right direction? I think I'm not. Head on up, head on up, head on up. $1,841. I wonder if that's right. If it's how strongly that's still being fought. It doesn't look right. 1,841 dollars. Divide 5,000 rubles is one. Yeah, it doesn't seem right. I read somewhere that it's 5,000 rubles an ounce. You can convert. So it's kind of interesting. I haven't squared that circle yet in my mind and understood that. But he's gone commodity backing, and there's a resultant effect. Gold looks like a basing ascending grind line. The wind is pumping here. That is broken. Is the gold silver ratio bullish? If it is, it's not good. It's bullish. It's back up. It had an HVF there. Remember that one? Ugly as sin with this little churn here, but that was an HVF. Ran it. Pull back up. It's having a rally into this news. Could puddle down if we're wrong. Silver down on the grind line. Copper looks like it's in a megaphone. Down on a bad inflation number because of interest rate rises. That's how it's done on previous megaphones. Grind line breaks. Like that. Copper looks a down. In spite of that spit up. This is not good technical structure. I would be tempted to draw through those lows like that and treat that as a spill through. Again, bit of a blowout there. High. So that's it, fine fellows of the ministry. I've round tripped on my uranium. This is why I'm acid. I got in over here and I'm marginally better after a long old round trip. Because we had a primer in here, got in there, and I'm here. So I'm barely better on a return move. Never made target. This is Rick Rule's uranium. But I've got most of my stuff on fear. Dollar dominance. Short debt. We didn't check the debt markets. Above 3. Inflation comes in hot. You push up to here. RH2 territory. Comes in unders. You drop. That is your RH2. So we will see. HIG getting a bit of a bid at these levels. You shorted at the just-in-time entry level, I would. TLT. The debt markets make me think that actually there will be a reprieve. The debt markets make me think maybe it'll be under. The oil, the other markets make me think no. So I don't want to sound overly confident. This looks like it wants to go up in value. And this looks like it wants to rest and maybe come down. Not strongly, but it looks a tad toppy. So the debt markets make the yield look like it wants to come down. And the values want to go up. And HYG is getting a small bid. So they stuck. They're either going to underprice inflation and give risk on all a little surge, that in which case Bitcoin goes up. If this bounces up and that comes down, the yield generally going up. You've got this problem, 3.7 today, Italian yields. But if the American inflation is coming down, they've passed it on to Europe. The indices make me think more downside, but they could get a rally here. They could get a rally, buy, but they could also have an accelerating spill. So we'll see this. There's a target to be made here. But maybe they rally up to neckline first and then it comes down. There's a target here. Maybe it's falling too fast. They rally it up, but I would stay with bear. So I might be wrong today. I'm not going to be macro wrong, in my opinion, for all these to fall. In spite of what the debt markets say, I think there's real weakness here and there's real strength in oil. And that, my friends, is going to keep killing any notion of contained inflation. We've already had lumber come hard down. It's going down slowly now. Uranium's already had a fairly big, on most other ETFs, fairly big pullback. You see, you had a messy HVF there that never performed, then you dipped and you're up. GDXJ, that looks bare. But maybe it gets a bid. Who knows? Looks bare. Gold down, usually associated. Copper looks sick, but it's been sick for a while. Platinum looks sick. Been sick for a while, could get a bid maybe, but doesn't look, I don't buy falling knives. Palladium in a legacy funnel. What is that all about? That upside HVF. That's what it's about. It's a full-on round tripper. And it broke this HVF, pointing to the likelihood that it'll break it again. So this could be a type 3 falling wedge, a type 2, before coming lower. This points to lower. You have taken back the original bull. Lots of forms. We could spend some time and look for head and shoulders in that. There's quite a few nestled head and shoulders. Massive grind line. Look at that descending triangle. You may even have a slap in the face and a very weird inverted. But the point of the matter is you've got shouldering, you can do necklines here and you can do necklines here. There's a lot of big reversals. And you've got an inverted HVF, so beautiful. In fact, that hasn't been made yet. That's a beautiful draw. Man, I'm just stumbling on that. Let's draw that. Bastard. We've got to draw it, guys. As we see it, you've always got to draw it. You see it, you draw it. It's simple. You've become a technician when you draw. And it's obligation. It's like moral contract with self. Because it's so much useful information. And you leave it on. Look at that. This is a gift. What a gift this is. We can also draw one or two of the head and shoulders. This probably. Palladium's going to get smashed. People are not going to be buying cars. Palladium, mon Dieu. Now, you would say, but disproportion. Yes, but it's already triggered and it's clearly on its way. So there's some element of a retrospective confidence here. Call it the retrospective confidence. Let's see how it's complied. Is it likely to work? 1700 to the downside palladium. This is going to be dollar dominance, whether it happens today or tomorrow. It is dollar dominance. I'm going to keep you on the right side of this market if I can, guys, because I want to win. I want you to win. How about that? Let's see. Is that a good draw? Especially with retro draws. You have information now that you never had before. Run the first interim. Rally back to the funnel. Fancy that. Break. Return move. 5 stages of a breakout. You have the theory. Bounce on a legacy level as well. That's confluencing. Yes, you bounced there. Come on, guys. Work with me here. We got 2 of them. Call me a liar. Coincidences. Down. Just invalidate. Funnels must be broken with momentum. Yes. Max spill. Just run. Rally. Into. Legacy. Key levels of significance. This is an awful draw. Bounce on the funnel level. And that legacy level. Yes. Trapment. Resist. Bounce. Come on. Give it to me. Give it to me. There's magic in the HVF method. Falling wedge into it. Going into a CPI report. Suspicion. Type 3. How far it spilled? 1700 round number. Run. 1690 something. Boom. On a down neck. Rallies. Runs into resistance here. Down. All in. Draw. Here. Done by me. Haven't looked at this chart in ages. Haven't sat in this chair in 6 months. Haven't looked at palladium in yonks. That is a valid draw. Head and shoulder. Ah, you've got your neckline. Thank you very much. We take the HVF axis in this instance for the macro one. Boy, oh boy, you're going to have a nasty period in palladium if that's it. I don't even know if it's even a valid one. Let's check it out. That is up at 3.4 and that is down at 2.2. Mother of God, that's a 1200. You're going to see palladium at $1,000 on this one. Palladium, the biggest blower to the upside. What do you think's happening? What kind of economy have you got that you're going to go from? 3,400 palladium. Man, I love charting. I love HV. Oh, it just gives you the future, man. I love reading the future from a chart. This is such awesome stuff. This is completely ad hoc, on the find. I wasn't even thinking of going here. It just was sitting there asking me to click it. I'm clearing all of that. Watch this. Watch this. Demanding, preaching, like a manic street preacher, like one of those winos with a bottle of wine in his hand and belly aching on the top of his lungs. That's what you get from me. You pay for that. Oh dear, you got to have a sense of humor sometimes. But this is just too beautiful, guys. It truly is. That is a 1,000. You're going to trade sub 1,000 on palladium. Hear me now. I would see this happening. You're going to trade sub 1704 as part of that. That's it. It's on. My next YouTube is written. You can jump on it. Plus you get this fella. Why not? Why draw both? The nestled. Because why? Because you'll get another level where it's likely to rest on the way down. That'll be like all these targets, interims, legacy levels that have been so significant. Stall box. In a cluster of levels, all just above the funnel that you're getting ready to thriller from Manila, absolute spiller. Boom. So Be gone with you. Give me back, mate. Oh, I didn't mean to draw that. I didn't mean to move that. Sorry. I moved the line. I hate it. I have to go correct it. But we do that in a bit. So daily. So let's go back to 12 hourly and let's get that head and shoulder. So that's a neckline. We got that big boy. Now let's do the smaller one. Where's armpit 2? The most logical round number, 2,310. That's armpit 2. You see where the bagel is? Reduce the bagel, by the way. 2,310. Where's these two? 2,313. Let's get the absolute low. Low is 2,310. Low is 2,310. Low is 2,304. So 2,310 it is. So you'll have a bit of interaction there. It's not far off. I'm not sure how much additionally you'll care. You'll have been deep in the source of money there. That is a spiller. This is a terrible situation for industrial metals. You don't want to be long copper. We can buy gold and silver cheaper, I expect. Not that you'll get the premiums might expand and availability might get real short, but this is pricing in a mofo of a drop in that metal. And copper looked garbage as well. This requires me because palladium, copper, these are the kind of metals you need to think of as production industrial. This looks like a garbage head and shoulder. You see that HVF? That needs to be drawn. You see it? That's your funnel that this thing's been sitting on. I mean, it's another gimme. Damn, man. I want to finish this clip, but I just see such good shit all the time. Stop throwing the good shit. I can't work this much. I don't want to talk this much. I want to finish. Oh, no, you got to love it. You got to love the gifts the market gives you. Guys, once you have the glasses, you can't stop seeing. It's almost like enough. I can't see another beautiful view. Don't show me another fabulous mountain with snow ski slopes on it anymore. Don't show me a beach untouched. I'm sick and tired of beautiful views that give wisdom and feel good factor. This is what HVF method does. It'll turn you into a manic street preacher. That the more you talk and the more you investigate, the more you keep finding, and you suddenly go from someone who never had an idea where to put a level to having too many ideas. It's unfortunately it's the fruit of great abundance. That's all I can say. It is the bringer of great abundance in terms of understanding. Draw these bastards. This is going to go down. Industrial metals, industrial semi-precious metals, down. I want to get out of my uranium. I think we'll buy our gold maybe a bit cheaper, but it might not go down near as much. This is pointing, everything I've seen is pointing to pain. 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 And you can gain during a period of pain. Don't get, oh, he's a misery porn. No, it's a gift for you. It's a gift. Where's your armpits? Let's have a little looky, see. Oh, just running the axis, you say. Just running the axis, I say. Marvelous. I think we can work that one out. Bagel, under the head, all the way up until it broke. Not the best jaw that I've done in my life. There. Look at this. Look at this and understand what you're paid to learn and what you're finding out about. There's your head. There's your left shoulder. This is deadly for industrial metals for me. Short the industrial metals. Some form of a right shoulder. So that is like this. And this is a ghastly, ugly, complex head. But did you expect anything else? I've got to get this out because you guys are still going to watch this and it's already 3 o'clock. Damn. Got to shut up and finish. Stop finding good shit. Okay, I'm finishing. Get this out. I'm going to tell you to watch it. It's important. This is what I think is happening. Bad news. Freak out metals. Probably going to happen today and start, but could be wrong. If so, sell the rallies in a macro trend. I think we've got the macro right, guys. I really do. But as ever, I can always be wrong. And if you follow me, we'll be wrong together. Don't lose sight of sizing. Play smart. Okay, let's finish. And I'm going to dump these charts at the same time real quick to get you all fired up and on the go. Bye for now. Play safe. Remember that money management, please. But I think we might be onto